Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates of the stock markets, help you understand which way are the markets trending at in terms of the sectors, the stocks, the benchmark indices, and what's the right way for you to really approach the current markets. Also in terms of the stocks and news, the earnings that are coming about, how do you really approach some of the stocks that have already reported their earnings and are reacting to those earnings as well. We'll also be joined by an expert to help us with all of that. But first up, a quick check of the current market conditions. So 24 points up for the Sensex, 60,878 the current level. When you talk about the Nifty, it's hovering just flat with a positive bias at 18,108 kind of levels. The markets are absolutely flat amid a whole lot of volatility that we've been seeing through the trading session so far. The mid cap and the small cap indices are still sulking about 0.09, 0.08 odd percent. The mid cap and the small cap indices down in the red. In terms of the other sectors, when we see on the Nifty 50, you do have a mixed trend coming in there with the banks in fact in the green today. 0.8% of a rise is what you can see, and all the components, talk about financial services, the PSU banks, the private banks, all of them are supporting the market movement on the top. Apart from this, you also have the IT stocks that are doing well today and are in the green, but most of the other sectors are actually sulking today. Auto stocks are down in trade, slightly on the negative side. FMCG stocks down by half odd percent. Of course, the crack coming in from the HUL pack too. Metals are down by 0.4%. Pharma is also, not looking too well. 0.4% of a decline for that one. And the realty space stocks are also seeing some cuts at this point in time. In terms of the market breadth, you do have 27 declines to 23 advances as far as the Nifty 50 stocks are concerned. On the top gainers today, you do have Tata Motors. There's news flows as far as the EV pack is concerned. 2% uptick for this stock. IndusInd Bank, Coal India, also 1.5% up in trade. HDFC Twins, those are the big heavyweights that are contributing to the markets coming into the green after that volatile move that we've been seeing in the first half of trading session. And IndusInd Bank also inching up too. On the other side, you do have HUL after those earnings and the royalty hike. The stock is down by 2.4%. Asian Paints has missed the earnings estimate, even though the management is confident of, seeing a demand revival going forward from here. The stock has reacted on the downward side, and this is the second day in a row. Yesterday, we saw about a 3% cut, and today there's a 2% cut as well. Nestle, JSW Steel, and Bajaj Finance, the other, movers on the lagging side as far as the Nifty is concerned. But time now to welcome our guest for the day. Mr. Abhishek Basu Malik joins in. He's the founder at IntelSense Capital and also is the Chief Equity Advisor there. Good afternoon, sir, and thank you so much for taking the time out for this discussion. First up, a quick word on the markets as to how are you looking at the current setup. And, we've been seeing a lot of sessions with a lot of volatility so far. What does it really indicate, and why are we not being able to see a clear direction in the market?
So, first of all, good afternoon, and thanks for having me on your show. See, the first thing is markets, as you just mentioned. I mean, it's been completely lackluster. Last few days, it's just either it's going up or down a little bit. The main thing is that it has been completely directionless. We're not going anywhere. It's been a very narrow range in which the stocks are moving. So nothing too much to read into it. I think now is a good time for people to take their eyes away from day-to-day stock movements.
Yeah.
Look at start following the businesses. The quarterly results are coming. So maybe it's a good time, and even the market is giving you an opportunity to start looking at trying to pick stocks rather than get pulled into the activity of the market.
That's true. Let's actually jump into the earnings reaction that we've been getting. A whole host of big companies reporting their earnings, and the stocks are reacting, on those earnings as well. Let's start off first with HUL. Now, of course, apart from the earnings that we've seen here, the earnings are pretty good because, you see the net profit rising 12% or 25.05. It has beat estimates as well. There was in fact, when you talk about the kind of increase that we've seen on the revenue front also has been there. It's coming at 14,904 crores. That's up by 13.8 odd % year on year too. So it's beat a lot of brokerage house, reports on that too, and the kind of expectations that they had. But what is really overhang, what is kind of coming as an overhang is the royalty payment hike to Unilever by 80 basis points to 3.45% of the turnover. First up, could you just help us with two views? One, on the earnings front, how do you really see the fundamentals moving for the company? And two, how much of an overhang can this really have going forward? And what could this mean for the shareholders too?
So, good points. Firstly, I think the importance of HUL from an earnings perspective is not only about what the company is doing, but to me at least, it gives a very good indication of how especially rural India is doing.
Yeah.
Because, this is one of the best proxies for us to understand how consumption is playing out in rural India. And if I go through the management commentary, I think what they're saying is that inflation is behind us, and also the problems or the issues that were there in terms of rural income distress, that is the worst probably is over in that part as well. So these two things are very important from a commentary perspective from HUL. Now coming to the royalty part, I think, see, this is something that we should be expecting. If I look at HUL, or if I look at the business, and I take say a 10 or a 15 or a 20-year view going forward, Hindustan Unilever is going to be one of the growth engines for Unilever Global, right? Because India, the demography, etc., is going to support growth, and it is but natural that the parent is going to look for more and more ways to sort of participate or get more out of what is the growth that is going to come from India. And that is going to happen more because in the next 1 to 3 years, both Europe and US is not looking very strong. So the earnings that they are going to forego from there, they have to make up somewhere else. And India is definitely going to be one place out of maybe some of the other emerging markets where Hindustan Unilever is going to, is going to feed into their parent company uh, in terms of sort of sheltering its earnings from the other mature markets. So that's the
You're
way I look
right.
at it.
You're right, Mr. Basu Malik. But the main grouse perhaps that investors have at this point in time is that perhaps this royalty is going to eat into the earnings available to the shareholders. It will benefit the company, and HUL's contention is perhaps to get access to Unilever's technology going forward and all of that. But for the shareholders' point of view, right, could this limit the upside?
So again, let's look at it, slightly dispassionately. There is no technology per se here. It's not. There's no high technology that Hindustan Unilever is getting from Unilever Global, right? Ultimately, they are making FMCG products that can be made by anybody else. What HUL has primarily are very, very strong brands, right? So the technology part I don't buy into, but the fact remains is that yes, it is true that obviously if I am giving away a larger share of my earnings to somebody else, obviously my shareholders will get lesser. There's no question about it. It will be lesser. The point is how much lesser and how quickly will get to a stage of equilibrium. Now the point here is, if there is a significant amount of growth that is available in the Indian markets over the next, say, 2, 3, 5 years, then obviously it will offset the the increase of 80-85 basis points of the royalty that we are paying out.
Okay. Let's also focus on two other earnings, three earnings in fact. Let's focus on first PVR. the entertainment major. It has garnered a profit of 16 odd crore rupees in Q3 versus losses. The revenues have also seen a strong growth right there. There's a sharp bounce back from the previous quarter on the back of some content performance as well, strong content performance. The top line has witnessed growth. In fact, when we see from operations, the revenue has grown by 53 odd percent to 940 odd crore rupees compared to 614 crore rupees in the same period last year as well. And overall revenue was up about 37 odd percent too. And in fact, the company has said that the quarter has witnessed a sharp bounce back from the previous quarter, and also the same has been reflected in the growth of the key operating metrics like admits, ATP and SPH too. Your thoughts on the earnings front as far as PVR is concerned, but the overarching theme still remains that people after COVID have actually got used to of watching content on the OTT platforms much more. Will that continue to be a big challenge for a player like PVR? And also I will come to the merger aspect later on. First, let's listen your views on this.
Yeah, so I was about to start off with the merger, but since you said we'll take it up later, fine. My personal view is we can for PVR or an Inox, uh, it's going to be slightly challenging because I think over the last 2.5 years, a lot of people have got used to OTT, and not only OTT. Now, what is also happening is you will see. So ultimately, you have one consumer. That person has limited amount of money and time, and you are competing with uh, say Instagram Reels, YouTube Shorts, you're competing with OTT, you're competing with so many things. So, and unless you get really great content, right? Unless you get really great movies, it's not going to be that easy for people. For people to go and pay a lot of money and get that theater experience. Now, having said that, I am personally a movie buff. So what I can, personally say is that the experience people will always look forward to India or globally. Theaters are not going to shut down, right? But the question is going to be the quality of content, the
Yeah.
number of good movies that are going to be available, and 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 that is ultimately what is going to drive uh, the business for PVR or Inox going forward.
That's true, and it is highly unlikely for all those viewers who got used to watching OTT, who've already got their annual subscriptions going, to suddenly stop their subscriptions. They're not going to go back. So, of course, their spend on the theaters is going to be extremely limited to only watch highly, performed or rated content in theaters. Even though that experience is coming back, you may feel like going back to the theaters, but that's going to be definitely a big challenge that we need to see whether people come out in full force to watch that. The other aspect that you were talking about, the merger with Inox Leisure, while the verbal approval for the merger has come through from the NCLT, the company is tracking the projected timelines, and they hope to complete all the formalities by the current financial year. But amidst this entire merger, how should the shareholders, the existing shareholders, really view this? Is that going to be something that they need to track on a daily basis, on a weekly, monthly basis to be able to see, or is that something going to be smooth and perhaps it'll result in long-term benefits?
I don't know whether it will be smooth or not. That remains to be seen. But one thing is for sure is that this is the merger of two very large entities for a particular and a peculiar situation. We had just because of COVID, uh, competition commission did not come in.
Yeah.
uh, Otherwise, this is a clear case of anti-competitive concerns being raised, because you are merging the largest and the second largest theaters together. And obviously, once the merger goes through, and if it goes through, then it will be actually by far a monopoly in terms of the number of screens available. So from an investor perspective, it should definitely be actually on good.
Okay. So let's talk about the IT major then. Coforge also released its Q3 earnings. The profit has risen on the back of some deal wins, better than expected 24% jump in the third quarter profit. The company has reported the outsourcing industry is riding on the orders from US and Europe, where the businesses have made an aggressive shift to cloud-based systems. And, that is something that has aided the kind of revenues that we've seen for the company. It has also de-risked the operating profile with a declining client concentration, while the attrition has also slipped about to 15.8%. So that's also an encouraging sign. However, the EBIT margin, the earnings margin before interest and taxes has slipped a bit to 14.45%. Employees' costs and the other expenses have also impacted the margin. We've been seeing all the big 4-5 earnings of IT and how they have actually performed better than expectations, or like come largely in line when we talk about the main metrics right there. But we're talking about what we're looking ahead in their major revenue sources like US and Europe slowdown concerns. What about a company like Coforge, the mid-cap IT space? How is that going to be really competing with the large caps amid all these recessionary fears?
So first of all, I think recessionary fears is the right operating phrase here. Whether US or Europe does get into a recession or not, the fears are definitely there. And when there are recessionary fears, one of the first thing that happens is companies stop spending money on any kind of large scale projects, and they tend to sort of just keep the keeping the lights on kinds of projects, well, maintenance support kind of projects that keep going on, or ones which are required by regulation. So those are the projects that keep going on. Now, with that as the backdrop, I think next 1 to 2 quarters will continue to be a challenge for all these companies. Within that, companies which are not pure play IT services, they may do slightly better. Companies which have focus on, say, some sort of product development or some sort of uh, you know alignment towards a particular industry which is doing well, so those kind of companies might do slightly better. But plain vanilla IT services companies, I think they are going to remain under pressure for at least the next 2 quarters in terms of earnings.
Okay. Let's also discuss the last earnings that are on our radar today, and that is Asian Paints. Of course, it came out with the earnings in the market hours yesterday, but that let's still discuss the stock because about 5% or down it's already been after the earnings reports came out. 3% down yesterday and 2% down today. Of course, there have been subdued earnings this time around. Absolutely flattish growth when we talk about the top line and the bottom line right there. Also, volume growth is definitely a major concern. The management did speak to us exclusively and talk about how the extended monsoons and the high base really were the key areas which impacted the earnings this time around, and they've also called it an aberration of sorts in this quarter. And they do believe that the indications from the December month for the volume and the demand is actually picking up, which we will definitely get to know in the next quarter earnings too. But they've ruled out any more price hikes, but no clarity as of yet as far as the reduction of the prices is concerned. We've seen most of these paint majors continue with the price hikes from May to September. This quarter they've refrained from it, largely with the input cost pressures really coming off, and they do believe the cost pressures to ease going forward from here too. But overall, Asian Paints, how do you really view? Most of the brokerage houses have actually cut their target prices as well. Global brokerage houses as well. Your own thoughts on Asian Paints, and do you really believe that the company's business palette needs to stand out for investors to really stay put in the stock now?
Yeah, I mean, I've for a long time I've been very surprised with the stock price performance of Asian Paints, because honestly speaking, if I look at the earnings, the revenue growth, etc., for the last, say, 3, 5, 10 years, then none of it is something that is to write home about for Asian Paints. They've been growing ballpark 10-15% top line, bottom line for the last 8-10 years. But the stock price has just skyrocketed, and at one point in time, there's practically no correlation between the earnings and the stock price. I think somewhere sanity has to come in. Ultimately, it's a paints company. It's a company, and after you paint your house, you cannot distinguish it by a brand, right? I mean, nobody knows whether you've used Asian Paints or Berger or something else. So the branding, etc., is also not a very important factor from an end user perspective, and it's basically something that is sold as a narrative to the market. Now, uh, so honestly speaking, I would expect, uh, once the growth sort of falters, I would expect the PE to derate, the stock to consolidate, maybe the stock to even come off for the next few quarters, maybe even a few years, or just go sideways for a few years.
Okay, okay. We also have the exclusive, an excerpt from the exclusive chat I had earlier this morning with the top management managing director, Mr. Singhal, right here. So do listen into that conversation as well, and then we will discuss further on the earnings factor too.
I think we expect further softening of prices in Q4 to that extent. However, as a trend, what we are seeing is the softening of prices is not uniform across the RMs. There are certain RMs which are crude derivatives in terms of what we see, where there is possibly a higher kind of a decrease which is happening there. But in terms of some of the raw materials like titanium dioxide, which is core to the industry, we have seen lesser decreases which are happening to that extent. And therefore, what we see is that currently, while the trend in terms of softening will continue, but overall, we need to kind of really assess the scenario across the RMs to arrive whether at this point of time we need to take any price correction going forward. Immediately, there are no price decreases which are getting announced to that extent. And I think we will decide in terms of what we need to do well into the quarter after really kind of taking into account all the kind of reductions which are happening. We must also remember that the environment still continues to be volatile, and we need to be kind of looking at a slightly more stable environment in terms of taking any other calls in terms of how we need to look at the pricing decisions as we go forward.
But can we rule out the price hikes for now?
Definitely, yes.
All right, so you heard the top management of Asian Paints right there as well. Mr. Basu Malik, we've discussed for earnings and the reaction of the stocks as well. In terms of a buy, sell or hold out of Coforge, HUL, PVR and Asian Paints, which rating would you assign to which?
I don't track or follow any of these in terms of giving a recommendation. But if I had to force myself to buy any one of these, probably I would go and buy Coforge. But
Okay.
But in general, I would not have a view on buying, selling any one of these four stocks.
Okay, understood that. Well, thank you so much, Mr. Basu Malik, for speaking to us and sharing all the insights on these earnings factors. And we shall definitely continue to chat more about markets in the future course too. Let's look at how the markets are trading at this point in time. Both the major indices, Sensex and the Nifty, have slipped into the red. 25 points gone there for the Sensex, 60,832. The Nifty hovering near 18,095, down about 12 odd points. Flat with the negative bias. There have been a lot of volatile moves right from the early morning trade. So we still don't have a clear direction of where the markets really end in today's trading action. We'll keep an eye out on the last 2.5 hours of trade to see if there are any more indications on that front. So do stay tuned on to with us on Business Today TV. Don't forget to subscribe to this channel and also stick with us via our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks.
Hello and welcome to Business Today Television. I'm